replay. So welcome everybody to this week's webinar. I hope you had a wonderful trading week last week. And this week, I hope it'll be fruitful and beautiful. That being said, does anyone have any questions in regards to, stuff we touched on last week? Or is there any questions in regards to anything you want to know, maybe entry, exits, stop loss, take profit, or fundamentals, technical, support, resistance, whatever it is, people that use Fibonacci and all that stuff, is there anything in particular you would like me to touch on? If you have something, please paste it in the chat. Thank you very much. See gold, Euro, AUD. Okay, let's go. Okay, that being said, right, the strategy comprises of mainly three different fundamental aspects, and we'll say about another three different technical aspects. So the fundamental aspect of seasonality, and we have COT, and then we have the probability. Okay, so those are the three aspects of the fundamental side. And then on the technical side, we have the William, we have the average week count, and we have literal support and resistance in the EMAs. So basically what we do is the COT report covers, three different categories. We have commercials, non-commercials, and non-reportables. Now, commercials are people or organizations that need, specific assets for their business purposes. That being said, basically, if a company, for example, needs to buy stocks from another country, they have to get the base currency of that country in order for them to trade, right, in that country. So when I say trade, I'm not mean like digital trading, but I mean like buying goods and services. So if I wanted to buy steel, for example, from, let's say, Japan, I need a Japanese yen to, to get that. So I convert my, my pounds to Japanese yen, then pay, to get those resources. Now, commercials are not really, they don't really care about market prices going up or down. They don't really care about making money in between it. What they just care about is, look, are we getting the best price for the goods we're about to buy? I'm just going to commute everybody for a second. So are we getting the best price for the goods we're about to buy? That's what they care about, right? And Mr. Ozo, you have your hands raised. You can unmute yourself. Sure.
Good evening, Mr. Dage. Can you hear me?
Yeah, I can hear you loud and clear. Good evening, Mr. Ozo.
Okay, please, I want to ask concerning the COT report, because many a times we've been told about how the CFTC track those information. So my question is this: how do CFTC get to track those information as regards to the people that are buying currencies in order to do businesses in other countries? How do they keep track of those information and those information that are being published for us on CFTC website and on Trading Star as well? I want to understand how they keep track to those information.
So basically, the way they do it is CFTC report is primarily based for the United States, since most of the market is actually being moved by the United States and UK. What they do is, if there's any transaction occurring within the United States, the government will know, because the money is moving through banks, right? Now, banks are regulated. Now, if banks are regulated, banks have to tender the positions to the government under the, there's a specific act for that. I don't know exactly what act it is, but there's an act to tender that so they don't manipulate the market. And the way we come in is we come in under the Freedom of Information Act, which allows us to then gain access to this information. So the way the hierarchy works is this: the federal government have a leash on the banks based on regulations, right? Based on that regulations, whichever company that decide to transact outside of the United States have to tender their transaction to the government, right? Or they have to tender their transaction through the bank, and the bank has to tender that transaction to the government. And we get that information based on Freedom of Information Act. Now, if you look at a COT report, most of the times, what you will see is you will see other currencies having massive amount, like 33,000 positions, 100,000 positions. But when you look at the United States dollars, their positions are quite low. It's because most of the banks don't really need to buy their own currency, or most of the companies don't need to buy their own currency because they produce this currency themselves. So in regards to the question that you have, what we're looking at here is the ideal answer to that is based on regulation, it's a must. They have to tender that. And if they don't tender that and they suspect a violation in the market, then the bank might get their license revoked or they'll get heavily fined. Now, I don't know how often, you hear this, but in the UK right here, you hear people a bank get fined, 200 million, 500 million for market, practices and all of that stuff. It's because of sometimes they try to cut corners and not report these positions to the government. And based on that regulations, their primary objective or their primary goal is to nab people when, they commit this act of not reporting their positions. Because if they don't do that, they're more liable to manipulate the market. I hope that answers your question.
Perfectly. Thank you so much.
Okay, cool. So in that regards, what we tend to do is copy, the commercials, because they don't have any interest of trying to make money off the market going up or down. They literally need it for their resources. And what most companies try to do is cut down cost. So in order for them to cut down costs, they have to employ certain strategies to make them understand or put them ahead in the market. And that's why we copy these guys, and that's why they're more accurate. Now, there's the non-commercials, which are people like, you and I, some small banks, some big banks, and all of that. We just want to make money out of the market going up and down. Now, we don't follow these guys, right? We don't follow these guys because their primary focus is to make money off the market. So their perspective is limited to the market only. Trying to make money off the market. Most of the people, if not 80 to 90%, are focused on technicals. There's some focus on fundamentals. And, they're not much in regards to the information that these people have access to. Some of these guys from the big companies, for example, have access to inside information. And because they're not trading the market, they're allowed to use that information, right? They're not using it to generate money for themselves. No, they're just using it to buy goods. And you can't really stop someone that wants to get a better price for something. If I know, for example, the price of coal in one part of the world is, $20, and I know another part of the world, the price of coal is $10, you can't fault me, to go buy from the $10 guy because I'm looking for the best price. But if I'm trading coal and I know, look, the price of coal is going to drop based on this that's happening because of this company told me this and that, that's insider trading. So I get nabbed for that. So moving forward, what we're going to do today is let's quickly run through this so we don't waste much time. So that covers the COT report in a nutshell. The seasonality is just the seasons, but right. So right now we're moving towards winter, right? So every single season has its own way in which the market moves. And so you have, summer, winter, autumn, and spring, and all of that. The way the market moves in these periods is different. That's why we have 4 quarters: the first, second, third, fourth quarter of the market. And what the seasonality do is tell us which quarter we're in and how prices reacted during that quarter over a period of time. And probabilities and in-house too. Basically, it's like it's a tool that allows us to know what's the percentage an asset is going to move in our favor on a specific date. That tool was developed in-house. So I don't know how to explain that really to you guys, but basically what you need to know is it works. It was literally built in-house. There was so much algorithm behind it. Now, let's go to today's assets. So someone wants us to look at gold. And then what else are we looking at? So I'm just going to list them all right here. So I'm going to look at each asset individually rather than looking at them in pairs, because when you break things down, it's much easier to understand than when you basically look at them in a pair. All right. So AUD. and then I go gold. So I'm just going to look at them individually. JPY, GBP, so yeah, go CHR, go CAD. Okay. Okay. So let's look at these assets one after the other. So the first one to look at is gold, right? Gold has 2,000 new positions being added to it. So what we focus on is commercials, as I spoke about before. These are the only guys we're interested in. We're interested in their changes, right? Now you see the date is on the 18th, right? That's a while ago. But COT report always lags by a week. Apologies, I don't know what just happened. Something just happened. Lost you guys for a second. So we focus on gold. We look at, the changes, right? So if the change is in positive in a specific direction, then that's good. If it's negative in a specific direction, for example, here, we don't worry about the negative figures. We just focus on the positive. So we want it to be positive on one side and negative on the other. That's the best ideal. If it was positive on both sides, then there's a little bit of conflict. If it's positive in one and no, if it's negative in one and it's negative in the other, then we don't even touch that asset at all. So right now it's positive on the long side on gold. So what we'll do with gold is we're going to put down long, right? So next thing we'll check all the assets and see. So CHF negative in both. We don't touch CHF this week then. So what we do is we delete CHF out of that list. Next thing we look at JPY 16,000 going long. So that's good for us. That's actually a very big deal because I think CHF has been losing and JPY has been losing strength for a while now. So take that. And then pounds. Now you can see pounds are actually struggling because the prime minister, they just changed the prime minister recently. She resigned and then we're looking for a new one. So depending on whoever comes in, it will determine how the market runs high or low because market is sometimes driven by emotion. So but currently right now, I would not really be trading the pounds because it's highly volatile. Anything can happen to these assets at any time because there's so much human emotion. But for example's sake, I'm just going to pull long because that's the biggest, in terms of long and short, it has the biggest size of position. But short has also a few positions in there, but I don't really care about this at the moment. Normally, I would care. I would start it up because of that conflict of interest right there. But let's move to the next one. So next one is AUD. I'm going to also start that up because you have it moving in both sides. So I'm going to put long right here. I'm going to put star right next to it. Long has the biggest, position, but short also have, 2,000 position. But the good thing is because I'm seeing these guys going long and these guys going short, then the opposite, someone has to win, right? I stick with these guys. So next in CAD as short. This is not negligible because it's about 33% of this position, not up to 33%, but 30% above is still high. So what I do, I also start that as well. So I'm going to put long, I'll put that as star. So everything that we haven't cleared is only just gold and JPY at the moment. So, and then we have CHF and then we have Euro. So CHF, then we'll go Euro. So CHF, oh, no go. Apologies, I don't know why my Zoom keeps cutting in and out. I don't understand it. So next thing we do is Euro. Euro is going down. And what we'll do is we'll put that as short, right? So short means sell, long means buy. Just keep that in mind. Short means you're selling, long means you're buying. That's what it means. So next thing we do is we look at the seasonality. I'm going to try to speed this up a little bit because of time, right? So what we look at is seasonality is we're looking if it's the right time to go in a specific direction in this asset. seasonality gives us that clarity. It gives us the entry date and how long this trade is going to last for. And probability confirms our entry dates for us, basically. Well, I'm just going to wait for that to load. Let's see. I think I'm having connectivity issues, guys. It keeps cutting out. Yeah. I don't know why it's doing this, but it keeps cutting out. I think all of a sudden I've developed a connectivity issue. I'm just gonna wait for it to load. So gold, currently we're in October, right? Just gonna quickly zoom in. We're like around here, this period of time. I'm gonna quickly zoom in and see what we have for gold. So gold is right here. Now for gold, what we're looking at is we're looking at long. Now we're looking for gold to buy, but from what I can see from tomorrow, gold looks like it's gonna sell from 5 years, 47, and even the 15 years look like struggling. So for that reason, gold is not in the equation. This week, we're not trading gold at all. It's not in alignment. Next, we can look at, I want to look at the least risky ones first. So let's look at JPY. I'm just waiting for that to load. This is taking its time today. So with JPY, we're looking at around the same period of time now that we're in. So looking at 23rd. Let's just check. 23rd. We're right here right now, and the 5 years shows like it might dip. The 44 and 15 years show we might actually have a little bit of up move, but it doesn't come into clarity till the 29th. Now, we're looking for this to go long. Now, because the 5 years doesn't align with the 44 and 15. Now, if you're new, basically all three has to be in alignment. They have to move in the same direction. Like for example, right here, all moving uniformly down. If one is moving out of place, we do not even touch that trade. So for this reason, JPY also will be disqualified because the 15 and 44 years seems to be going long. But if I'm not mistaken, the 5 years seems to be going short. Actually 22, then 23. Let me just isolate the 5 years for a second. Let me see that. Okay, actually, it is going up. It's just not. It's literally not that visible. So the 23rd, we have 24th, 25th. Yeah, it looks more like a risky one, but it is going up. Yeah, it is going up. Yeah. Yeah, it is going up. So okay. In that regard, yeah, it's not strong. I would have loved it to be better, but I think we can still take it. COT would mitigate that because COT actually do have a lot of position, and I think JPY has actually been losing strength, so it might be a good trade for us. And so we're gonna get that bounce back from about. This is where it gets tricky. About till the 27th, I think. Yeah, 27th. So I'm just gonna put JPY. I don't know exactly what dates I'm actually gonna go into this one. But I know exit. I know where my exit is gonna be. So probability is actually gonna help me, choose exactly where it's gonna be. Okay, yeah. So if that interest rate release is positive, then yeah, we might see that boost in that. So next thing to look at is euro for short. So let's look at euro going short. Let's see what the euro going short with that. So 23rd, let me actually zoom in. So we're currently right here. The 24th, no, 25th. 25th to 26th doesn't really do much for me because it looks like it's gonna go back up. So yeah, that doesn't really do it for me. For this reason, I'll let euro go. I'll ideally go into euro on the 29th. I'll be much better going into euro on the 29th, right? Well, that can't even be possible because 29th is Saturday, so probably 31st, somewhere around here. So that being said, euro doesn't go on that list. So far, JPY seems to be the primary right here, right? JPY is the primary. Now I can quickly check. I want to check GBP last because it's subject to heavy manipulation at the moment. Bank of England is involved and you want to be careful. These guys can, dump a lot of cash or pull out some cash, being careful. So, but something I'll keep an eye on. So the next one to look at is CAD. CAD is going long. All right. So, yeah, that's, so we're looking at maybe 27th. Yeah, around 27th. So Thursday, Friday. Yeah, Thursday, Friday. You know what? It's not long enough for me. I don't want to risk it. So I'm gonna actually take CAD out of that list as well. A euro 2 comes out of that list as well. Oh, apologies. Let's check AUD, then we'll go back to GBP. So basically, with all of these being checked, right? If your asset has, 2 assets have ticked off the list, then that asset is literally a no-go. It's best to be safe. If your asset still has maybe 1 on this list, then it might be possible to trade that asset. So AUD, we're currently around here, but just by looking at this anyway, I'm seeing a conflict. So, 15 and 4 and 36 is saying buy, while, 5 is saying short. That doesn't really count for me. So automatically AUD comes up the list, and you can actually see it reflect because in the CLT you have some long, you have some short, and seasonality is also showing some long and some short. So you don't really have that alignment. Now the trick to trading is, cherry picking. You have to literally pick the right one for you. You don't want to really pick everything just because it might work. If you're doing something because it might work, then if it doesn't work, you lose a lot of money. So you want to be sure of what you're picking. So with GBP right now, what I can also see is the alignment isn't steady. Isn't really not much because on the 23rd, right, it looks like we might go long, and then 5 years dived after the 25th. And, even though 15 and 45 maintains that steady upbeat, 5 years seems to have, taken a nosedive. So it isn't that heavy, but for that reason, I won't touch it. that being said, that leaves, that leaves this on the table, literally leaves JPY only on the table. So the asset we might actually get to look at this week might be CAD JPY, CHF JPY. Those are the primary two that we can look at for now. So I'm going to go to probability next. So I'm just going to look at, the CHF JPY and the CAD JPY and look at the date that will be ideal for us to go in. So I need 3 days straight that the market is going in a specific direction. If the market doesn't seem to be going 3 days straight in the direction that I wanted to, I won't take that trade. So we can see, like, literally from the 25th, for example, CHF JPY is pointing short. Now, because we're expecting JPY to go long, automatically, if JPY gains strength, CHF will lose strength, which then gives us that 25th, 26th, 27th, 28 going short. Now, I'm just going to do one last confirmation with the JPY asset to see specifically if that 25th is also the alignment that we're getting. If we get that alignment for 25th, then 25th will be our entry date, which will be on Tuesday. So you have to just literally look at when is the best date to go in. So you don't have to be, I think I got it. You don't have to be in the market 24/7, right? That's the like literally that's the game. You want to be in the market only when you need to be. If anything is beyond the date you want to be, you don't want to be there. So 24th, 25th right here. The 5 years doesn't seem to support it, but I think we can actually still go into it. I'll put it at a medium risk trade. We have that 25th right there, 26, 27. Then after 27, we might see a dip and probably get out on the 27th. So in regards to this, for example, we get 25th to 27th, and that will be CHF JPY, CHF JPY, and that would be short, right? So if you look at it just by looking at one specific asset, you can actually break down a pair very easily. And the next one to look at is CHF, CAD JPY. So with this one, for example, CAD JPY, we don't really get that 25th, but we get 26, 27 for short. Now, keep in mind, I always like it to be 3 days. I like to have that 25th, 26, 27. But if I don't have that 3 days, I can still trade this. But from the 26th and the 27th, 2 days trade, not really my style, but you can still take that. That would be medium/high risk. So we have 2 assets right here that we can look at. And now what we can do is we can now use, the technical aspect to fulfill this. So CHF JPY right here. So we're looking for this to go short. Now, I like the William tools because William tend to point in the direction an asset is going to go. it's been pointing short for a while now, and then markets start falling, and it's pointing long. Now, because I know I'm not really going on this asset tomorrow, what I'm expecting in the market do a little bit of up move, probably hit this level right here. And then from that level, markets start diving down, possibly breaking the 20 EMA and going to the 50 for, take profit, right? Now, for the people that have been here for a long time, to use the average wick. So there's something called average wick, candle wick. And basically what this does is we calculate the average wick size of the candle. So because we're going down, so we look at the sell candles and calculate their up wicks. So in this case, we have 130, 113, 37, 37, 64, 44, 16, and we take an average of that and then use that to determine where we should wait price to get onto before we start trading down or before we start looking for our entry. But because we have short time, I won't be able to do that right now, but ideally the next thing is, let's say, for example, you get price at an average of, let's say, it's right here, maybe 40, 50 pips, for example. You want to wait here before you start looking for your entry. I would even wait till price hits probably right around here before you go in. Now, keep in mind, this is not, professional financial advice. You can do with it whatever you praise. It's just for educational purposes, what I'm putting out here for you guys. But ideally, what I would do is just wait till price gets here and then start trading in the opposite direction and going down. And to sweeten things off a little bit, what I do is I would then get any support and resistance indicator, and just a support and resistance indicator like this one, for example, and I'll use it to check the levels, right? I check the levels of where I want the asset to get to. So in 4 hours, it really shows me that here, but I'm not going to do that because I know price will most likely move up a little bit. So I check 1 hour and see if there's any level around this region that I wanted price to be in the first place. Now, what I can see is there's a level here, there's a level here, but I'm banking on price possibly doing a quick run up and trying to raid the people that sold already on this asset. And I'll put my level right here. Now, if I delete, let me see, if I delete the support and resistance indicator, let's see where that is on the daily, which is around, I was going for here anyway initially. So price will most likely be between around here to around here, or maybe somewhere down here, or your average with candle size. Now, to determine what your stop loss is going to be, if you go on a 4 hours, I do ATR times 1.2. Now you can see this figure is quite high. It's about 81 pips. You can do 1.5 actually. I do ATR times 1.5. So it's about 81 pips right here. So you can do 81 pips times 1.5 and use that to set your stop loss. Alternatively, you can do ATR times 2. In which case, if you go in right here and you do 81 pips times, 1.5, which will give you about 120 pips, somewhere, let's say somewhere around here, the possibility of a market rating is quite low. You would most likely not get rated. But you guys need to watch your other webinars to understand how to set your support, your stop loss and your take profit with the ATR too, and then take your entry with it also. So that's all I have time for today, guys. I really appreciate you guys for turning up. And this is the trades that we're looking to take. If you need the tools, go to the website, DM Empire, business.dmempire.co.uk, and you can get the tools from there. So have a lovely trading with you guys, and God bless you all. Take care of yourself.